Very good and beautiful morning. Welcome back to another daily market outlook. EURUSD is consolidating but pushing down lower slowly but surely as of yesterday. Now, still waiting for the real moves to happen. The biggest move actually happened and occurred on GBPUSD, the trade that we discussed yesterday in the market outlook. But today we have a lot to discuss, so let's dive straight in. First of all, US Commerce Secretary Lutnick, we have reached a framework to implement the Geneva Consensus. We expect that rare earth and magnet issues will be resolved within this framework, and we are going back to see if Trump approves it. So China and the United States obviously had talks within London for the past 2 days. There has been somewhat of an agreement made, but Trump and Xi have to still approve this agreement, prove this discussion that has taken place. Now, any positive news in relation to Trump or Xi approving the overall deal that has been established within London will push the US dollar up higher, the Australian dollar up higher, the New Zealand dollar up higher, and the Swiss franc and the Japanese yen down lower. Now, furthermore, Trump said that Iran is becoming much more aggressive in nuclear talks, which obviously has an effect on gold mainly and as well on oil prices. And last of all, today is obviously the big day for CPI, which is consumer inflation. Now, this is expected to be higher due to increased prices coming from tariffs, and higher than expected CPI will obviously be bullish for the dollar. Now, look, on one side, you have the expected number, which is by hard 2.4%. Let me quickly check. So with the expected number for CPI is expected to be 2.5%. That is the overall forecast. But if it is higher or lower than this will cause a big move. So let's say it is 2.4%. This is going to be bearish for the dollar. 2.6% is going to be extremely bullish for the dollar, and 2.5% probably won't do too much with the US dollar overall. Now, looking at EURUSD, guys, we can see that we've been consolidating. The market overall is waiting for CPI to drop and for the trade deal news or updates to drop as well. Overall, I am still interested in looking for further downside on EURUSD. We left behind equal lows, obviously, over here at this overall low here after sweeping the overall range high. Now, you could view this as an area of consolidation, and if you do so, here we liquidate the high, and here we have equal lows still open. So I'm favoring an overall push in towards the downside for now on the short term for EURUSD. We can see that the immediate order flow here on the 15-minute time frame, we break market structure. We have this supply zone over here, which has been holding. This morning, we swept the Asian range high. We liquidated, and then we start pushing down lower. Now, obviously, this morning, again, on the other side, we also liquidated here at around the 345 low. So again, the Asian session low has also been consolidating or has been taken out. So overall, I'm looking now to see if EURUSD can sustain its overall push down lower. I'm still favoring further shorts for euro dollar, in line pretty much with what I expect from these trade talks, which should, in my opinion, have a positive outcome and push EURUSD down lower. Now, let's say we do push up higher, then we will be looking for an overall shift in the market structure again at a later stage. But what we can see now here is that after coming kind of like outside of the area of consolidation with this liquidation wick, what happened? Well, the market then provided us with a 4-hour change of character in towards the downside. Now, until now, the current fractal high is being respected. Current fractal low is still open. So I'm looking just to follow the 4-hour fractal structure, to follow this 4-hour supply zone further in towards the downside. Now, the overall market structure on EURUSD is slightly complicated in the sense that, and let me show you this on a clean chart, is that we have been, let's say, moving pretty consolidative, right? So in these kind of market conditions where we're mainly just consolidating, I look at the range that we are trading within, which is pretty much, let's say, this over here. So let me just highlight that as an orange box. And then what we have is at times these deviations outside of that range, where we have here sweep of the lows, sweep of the high, sweep of the high, sweep of the lows. So I'm just looking to kind of like trade and ping pong this chart from one side to the other. So that's why I'm mainly looking for those EURUSD shorts as of now, and I'll be sticking to that bias. Obviously, I can be wrong. Everything is going to be dependent on what those inflation numbers, what those consumer inflation numbers show us. But until now, we have seen positive developments in relation to those trade talks on the other side between the United States and China, which should accelerate an overall push in towards the downside on EURUSD in line with the 4-hour fractal structure. So yeah, as long as this 4-hour supply zone holds, I'm still favoring those shorts and I wouldn't be looking for longs. And for now as well, the current fractal high here is holding, which is the high of this bullish candle over here. This here is the fractal low, and I'm just looking for supply to hold and push the market down lower. So that's what I have for EURUSD. Going into the dollar index, the dollar index has still been consolidating. Again, remember what I mentioned in yesterday's video. This is pretty much the range that we're stuck inside of. And then again, what you see here beautifully is that the 0.5 fib is acting as a natural area of support and resistance. To be honest, I was actually looking for slightly lower prices yesterday. I had kind of like these ascending lows here marked out, and I was looking to take out this low, and then the reversal happened earlier. For now, this internal market structure is bullish. Let's see if this demand zone here can hold this kind of like sell before the buy and push the market up higher again. All we pretty much just need to do here on the dollar is break out of this area of consolidation. There's no real use in looking at fractal structure on the lower time frame due to, let's say, the consolidative price action that we're seeing. But overall, I'm just looking at the fact that we squeezed in towards the lows. We squeezed in towards this previous area of demand over here. So this area of consolidation that we had, again, drop, base, rally, took out the equal lows here. And then we come in towards that demand zone with this descending corrective price action where we break the low, retrace, break the low, retrace, showing a slowdown in bullish momentum. But now, obviously, the market is just consolidating. It's charging for the next big move. Quickly zooming out onto the daily time frame, we can again see, or the weekly time frame may be a little bit more clear. We can see that we're trading now at the low of the range. So accumulation range, sweep the highs, sweep the lows. So you're kind of like just looking for somewhat of a bounce. But again, this will be very dependent on the current news that we have coming out, both in relation to inflation. So today, again, consumer inflation. Tomorrow we have producer inflation. And on the other side, the updates geopolitically in relation to those trade deals, which are currently being established and which we are now, waiting for updates on. But overall, still favoring a further push up here on the US dollar. What we simply need to see before, let's say, we can really take off is for us to break the current fractal high, see a strong candle close above it, because then this area of consolidation will be a strong demand zone to fuel the next leg up, to take out this descending high, and this descending high. So that's what I'm currently looking for on the US dollar. Going into AUDUSD, we can see that AU is still consolidating and kind of like trickling up higher. But at the same time, not really moving anywhere. Again, not a pair that I'm really actively trading at the moment. We can see since, Monday, we haven't actually really been moving at all. It's waiting. I do think there is going to be a bigger drop on AUDUSD in the near future. Let's say overextended move, ascending corrective price action. More often than not, that will lead to an overall push down. However, preferably you want to see that happen from an area of liquidity. So above this overall swing high, that is kind of like your liquidity void, your area of liquidity, your supply zone. Let's call it like that. Which should cause an overall push down. Here to the left, we don't really have anything significant in terms of fresh supply zones. That's why I'm mainly just looking at this liquidity high, which is a major high. It's kind of like the only thing, in my opinion, that can really cause like a longer term push in towards downside. And if we were really that bullish on AU, I would have preferably seen a lot stronger price action happen from this. But for now, the Australian dollar does remain relatively strong, especially if you take into consideration that risk on currencies can perform well in this market if a trade deal is established, and the fact that Australia has high interest rates and a relatively stable economy as well. That's why we're also seeing strong pushes on, for example, the Australian dollar against the Swiss franc, and also the Australian dollar against the Japanese yen as well in recent, let's say, days, where the overall consensus is that there is going to be a trade deal established after those London discussions. Now, moving on into GBPUSD, pretty much my favorite pair of the week overall, has been moving absolutely stunning. Again, what can we pretty much just say about this? First of all, on the daily time frame, again, a one high, second high, and then a fake out on the second high, pushing the market down lower. Then what happened is that yesterday we saw a daily change of character over here. So if you look at this on a clean chart, what you'll see here is that we come in towards those highs. And what happened here is that we get the fractal structure shift. So push up, push down, push up, push down, push up, push down. So you see demanding control. And then here what happens, we sweep the high and then break the fractal low. That means that this is then supply. I mentioned this in yesterday's video. And then you see a perfect tap into that supply zone over here with the wick. And from there, we just push straight back down lower again. Now, overall, I've been in a few short positions on GBPUSD myself. First of all, the initial position being taken after the first 4-hour fractal break, which happened over here. So the market grabbed liquidity, as we can see, I mentioned it here, liquidity grabbed above these kind of like two descending highs that we have. So we grabbed that liquidity. Then what happened is that the 4-hour provided us with a market structure shift here. So the change of character low got broken. So we get the push down, we retrace into fresh supply, these two imbalance candles with this wick here as liquidity. And from there we start selling off. So my initial sell position was taken over here. Beautiful, beautiful, beautiful playing out in towards the downside. Then yesterday again, another 4-hour break of the fractal. Then what happens? Fractal high over here, fractal low over here. Then you draw in your Fibonacci retracement tool, and then you can see again 0.5 fib getting rejected to absolute perfection. On the lower time frame, this was your 1-hour area of supply. I was mentioning yesterday inside Discord, if you're not in, make sure to join through the link in the description down below, that from there we could sell off. And on the 15-minute time frame, again, you can see very, very clearly that we come in towards that supply zone over here. This is a strong area of supply, this over here. Why? Because it grabbed liquidity above these two highs over here. Man, such beautiful price action. Like you can see, these are the strong areas of supply because it grabbed liquidity here to the left. Like I say this a lot of times, guys. So therefore, there doesn't need to be any liquidity in the overall push down. So then you see as well, once we come into that supply zone, what happens? Change of character high, change of character low, boom, supply, boom, push down. So simple, and just beautiful playing out in towards the downside. So for now, 15-minute is kind of like in this bearish momentum. Let's see what happens this morning. We're kind of like retracing now on London Open. I don't really expect any massive moves to happen until the inflation numbers come out. I've already taken some profits on GBPUSD, and I would advise to kind of like manage your risk now with the inflation numbers coming out very soon, which can do anything to GU. So just remember that it is good to take some risk off the table and to manage your risk, because despite me looking for further downside still from GBPUSD, it can change at any point in time with those inflation numbers coming out or any bad news on the tariff deals. So just be happy with this initial around 120 pip push in towards the downside, which I know a lot of you have been able to capitalize on. Now going into NZDUSD, we can see that NU is also still consolidating. As I've been saying, it's not a very interesting pair to trade at the moment. The main reason that I'm not really looking at like an NU or an AU at the moment is because you're trading two risk on pairs against each other. And in these market conditions, which are so heavily driven by the geopolitical situations, you want to be trading like an AJ, you want to be trading a Swiss, you want to be trading, let's say, EURUSD, you want to be trading a GBPUSD, right? These are pairs that are moving much harder in current market conditions, where you have the US dollar, the Australian dollar, and the New Zealand dollar kind of like as your risk on pair. So anything positive in relation to those tariffs will push these pairs up. So that's why you don't really want to be trading these against each other, and you want to be trading them against the risk off pairs, which are obviously the Japanese yen, the Swiss franc, and then in this kind of like market, the euro and the pound also to a certain extent as well. So that's what I have pretty much on that side of things. I mean, NU not really moving anywhere. So I'm not really looking at it too much. 4-hour time frame also just so slow already since Monday. So it will only move with inflation, and then obviously it's just going to move purely based on those inflation numbers. So personally, I don't really like it in the sense that it's just ascending corrective. So I would prefer some downside push in the near future. But again, the real downside push, I believe, will only come once we grab like a significant liquidity point due to the fact that there's just no real area of supply here to our left. Then going into dollar Swiss, dollar yen, and gold. Dollar Swiss also still consolidating. It's also waiting for the dollar to break out and choose a direction. Still favoring longer term longs, with me expecting the Swiss franc to be weak. It has very similar price action to the US dollar in the sense that we've been consolidating and we're now kind of like at the range low. And you can see this is where we're now stalling. So I'm looking for that next leg up on dollar Swiss. It could push down lower in the kind of like immediate near term future. But for now, if you really want to get involved with this, it's going to break out soon. In my opinion, it's kind of like squeezing over here. I would favor a push up, but obviously if it does grab more liquidity underneath the lows, then I'll just look to get involved again at a lower price, and I'll actually be happy if it pushes down lower, because then the daily fractal will also shift earlier. So let's say it pushes down now, this becomes your daily fractal high instead of this high, and then we can just look to go long again once a demand zone is established and we see the change of character on the daily. Going into dollar yen has been also a great long position. Congratulations if you've been in this since Monday. I've been talking about kind of like the perfect support and resistance break retest. Doesn't need to be that complicated sometimes. Obviously, with the dollar being bullish and the yen being one of the pairs affected most by the fact that trade deals are coming through, yeah, we've been able to capitalize on longs further. Yesterday, I did close out some profits on my dollar yen longs, which I have been in actually all the way from, I think it was over here at the time, just because I needed to yield some, or to take in some profits on all my yen positions, because I was in some really good profit with AJ, CAD yen as well, for example, also at some really good highs, also a long that I've been talking about a lot in recent live streams. But overall, dollar yen still has room to push up higher, with the daily fractal being bullish, or not, no, daily fractal is bearish, excuse me, but mainly looking at this from a higher time frame perspective. It's just a beautiful higher time frame area of support, and especially in combination with trade deals, it's just good to look for those longs on this, in my opinion. Also with the 4-hour time frame, you're looking good here on the immediate time frame. I mean, it's a little bit of a messy chart that I have here on dollar yen. I know, just because market structure is just not so clean on this, but what I do like is that we had demand play out beautifully over here. This is strong demand because it liquidated this previous low. We pushed up higher, retrace again into this demand, push up higher again, this demand, and now we have this demand again. So just looking for the order flow to continue pushing it up higher, and as long as that order flow holds, you can continue to look for longs. Now, last of all, gold has been pushing up higher as of this morning. Pretty nice. On the daily time frame, first of all, you guys know that I'm looking for longs. Gold is bullish in my opinion still, especially with any kind of like tensions between Iran and Trump on that nuclear program. That should continue to push gold up higher. So I am just looking at this impulsive phase that we're currently inside of, which is this orange phase. So we had the pullback phase, now we're in the impulsive phase again. So I'm just looking only for longs within this orange box, not looking for any shorts at all. So go then into the 4-hour time frame. What do we see? We see that we took out these ascending lows over here as liquidity. We retrace into this overall sell before the buy, and then from here you just want to look for longs again. So yesterday I mentioned that on the 1-hour time frame, what you can see here is that we get the change of character. So we come in towards the 1-hour demand zone over here. We retrace into that 1-hour demand. Then that 1-hour demand had a liquidity low positioned right above it. So we come down with the change of characters, boom, change of character up. Then we retrace, boom, push up again, and then like sometimes you see these change of characters happen, and then everybody thinks, now I can short from this supply zone. But like this is more just manipulation, grabbing more liquidity, because change of characters happen everywhere, but often they'll just kind of like be liquidation events if they happen in, let's say, a nowhere area. And this for me is like a change of character in a nowhere area. And I understand like the higher time frame narrative is still to push it up higher. So I view this as a liquidation event, and then that makes this demand zone just that much stronger, the sell for the buy. So this was a very strong demand zone. Then if you look at the 15-minute time frame, what was absolutely beautiful, and we talked about this on the live stream yesterday, you have all of these ascending lows with that strong demand that I just mentioned. So then what do you wait for after liquidating that? You just wait for bullish momentum to return, because you're not going to wait for this demand zone over here, which has ascending lows. So you just wait for a new demand zone and new liquidation to be created. So what you see here is accumulation happen. You see kind of like this initial push up. A lot of traders looking at this demand zone, we reacted at like 12 o'clock, which is outside even of the Tokyo session. So I wouldn't be trading that demand zone. But then what you have here at 1:15, which is Tokyo Open, you see the liquidation event, and then you just see like the V-shape reversal up. That to me just means, okay, boom, buyers are coming in, liquidation event. That means that this is the perfect demand zone to go long from. And yeah, as you can see, beautiful, beautiful, beautiful trade playing out back up in towards this high. So yeah, that's it for overall for today, guys. For your information, today we're going live on the Trading Pit YouTube channel. I'll be dropping an announcement inside Discord. So if you're not inside Discord yet, make sure to join. Link in the description of this video, and I'll see you there.